there I was, watching yet another influencer on TikTok talk about getting in on the ground floor of the next big tech company. You know, the kind wearing a hoodie, drinking a $17 matcha, telling me, if I just bought this one thing today, I could be the next Silicon Valley success story. Spoiler alert, the ground floor is locked and the keys cost about $5 million in Series A capital and a handshake from a guy named Chase who went to Stanford and has never paid rent. But here's the good news. There's a back door, a weird, slightly less glamorous back door called secondary markets for pre-IPO shares. And no, it's not a secret cult, though it might as well be. Platforms like EquityZen and Forge Global are where you actually get to play in the world of unicorn companies before they ring the bell on the NASDAQ. Now let's talk about what that means, why you've never heard of it or are afraid to ask, and whether or not this is the closest you'll ever get to partying with VCs. The promise is simple. Invest early, retire early. You've heard the stories. The janitor at Google who got stock options and now owns half of Kuwait. Or that one guy who put $5,000 into Facebook pre-IPO and now buys alpacas for fun. But the reality, the average person doesn't even see pre-IPO shares, let alone get a chance to buy them. Why? Because this party is invite only.
Tickets, please.
Boss.
The champagne is reserved for insiders, early employees, accredited investors, and anyone who's ever used Synergy unironically.
Why are you talking like that?
Why are you talking like that?
Because this is my voice?
This is my voice.
Retail investors get the scraps. After the IPO, after the hype, after the valuation's been inflated like a biotech bro's biceps. But secondary markets, that's the weird alleyway next to the party where the bouncer occasionally lets someone in through the side. Let's take a quick detour through the evolution of access. Back in the day, you could buy into a company after it went public, and that was still a solid play. Think Apple, Microsoft, Amazon, classic public offerings with real growth. Then came the era of delayed IPOs. Startups stayed private longer. Why? Because they could. Thanks to venture capital, favorable regulation, and enough frothy enthusiasm to drown an economist. Companies started building billion-dollar valuations in private. That meant regular folks got locked out of the biggest gains. By the time a company went public, all the real money had already been made in the private rounds. Secondary markets stepped in to fill that gap. Platforms like EquityZen and Forge Global allow early employees, you know, the ones with stock options and ramen habits, to sell some of their equity before an IPO. It's like Airbnb for shares.
Here, can I have some of mine?
Someone else got the lease, but you can crash for a night. So, why does this matter now? Companies are staying private longer. In 1980, the average company went public within 6 years. Today, it's over 12. Early investors make all the money. By the time Robinhood lets you in, SoftBank's already building a panic room for their earnings. Liquidity for employees equals opportunity for you. Look, employees want to buy houses, pay off debt, or just leave their insane startup before it goes full Theranos. That's where you come in. Platforms like EquityZen and Forge Global facilitate this. These aren't back alley deals with some guys in a trench coat. They're regulated, compliant, and just shady enough to be fun. Trying to get in on a pre-IPO opportunity is like trying to date a celebrity. You don't know where to start, you're probably not hot enough, and their DMs are closed. Secondary markets are like meeting their assistant on Bumble. Sure, it's not the dream, but they do have backstage passes. I once tried to buy pre-IPO shares in a buzzy fintech company through EquityZen. Minimum investment was $10,000.
Oh, come on!
I had $312. Still, It was the first time I realized there was a backdoor. And now that I've climbed a bit further up the financial food chain, read I have a credit score that doesn't cry at night, it's become a real possibility. As of 2023, private companies are raising more than $100 billion annually in late-stage funding rounds. The average unicorn, a private company valued at $1 billion plus, stays private for 10 plus years, according to CB Insights. Forge Global has facilitated over $12 billion in secondary transactions since inception, and EquityZen has worked with over 300 pre-IPO companies and served more than 35,000 investors. The minimum investment on most platforms ranges from $10,000 to $25,000. And some funds pool smaller investors together. So yeah, it's not pocket change, but it's not call your wealth manager levels either. More like stop ordering DoorDash every night and maybe you could buy 0.02% of a unicorn levels.
How dare you, sir? You are gross.
The good news is the door is opening. Between regulation shifts and increased transparency and platforms actively targeting accredited but not rich investors, the idea of investing in pre-IPO shares is no longer just for the yacht club. And who knows, if equity crowdfunding and blockchain-based securities keep growing, this might become a norm, not a niche. It's a weird hybrid space right now, like the early days of Airbnb or Uber. Half Wild Wild West, half Goldman Sachs. But it's evolving, and if you're willing to dig, ask questions, and do some homework, it might be your ticket in. It's like The Great Gatsby, but instead of staring at a green light across the bay, you're staring at an invite-only IPO list whispering, if only I had gotten in earlier. But maybe now you can. Maybe now the East Egg Mansion is just a cap table away. Or maybe it's just another mirage in the desert of financial FOMO. Either way, at least you know the name of the game. So, next time someone tells you they got in early, ask them how. And if they mumble something about EquityZen and look away, congratulations, you've seen behind the curtain. Remember, you don't need to be a billionaire to invest like one, but you do need Wi-Fi, a pulse, and the ability to resist putting your entire paycheck into crypto. This is The Soft Collapse. Thanks for watching. Like, subscribe, and consider this your formal invitation to the weird party in the alley. We'll leave the side door open.